Thank you for watching ET Interview. It gives me great pleasure to bring on board a very special guest, Mr. Rajnish Kumar, Chairman of State Bank of India. Mr. Kumar, we are interacting for the first time during the lockdown period, so hope everything is well with you, your employees and your family.
Thank you so much, Nikunj. All well, touch wood. And I hope and believe that same is the thing with you and all the people who are working with your channel.
Yes, thank you very much. And I must also compliment on the incredible job what State Bank of India and your employees have done. These are war times, and speaking out of personal experience and what I gather from my friends and from people on social media is that State Bank of India really did a great service in ensuring that no single account holder of yours was not taken care of. So my compliments to you and your staff for really putting the best foot forward at a time of crisis.
Thank you so much.
Mr. Kumar, now looks like we are heading towards partial lockdown. What is your sense? How much time do you think it will take for economic activity to normalize? Because not everything will be functioning, but not everything will be shut down also.
Yes, it is what we call is the exit strategy, and relaxations are coming, and I think there cannot be any other way because the exit from the lockdown has to be partial and calibrated. So a lot of relaxations have been provided, and the various zones, red, orange, green, containment. So the lockdown period of last 40 days, it has given lot of insight and lot of data, I think, to the government authorities. And using that and using the analytics, the exit strategy has been worked out. So essentially, what it says is that not too many people should gather at one place, in simplest terms. And social distancing is the norm and should be the norm. And if we follow that discipline, then there is every possibility that the containment of the virus, so that will happen, and that will enable the government to take further steps and do more relaxation.
What is your personal assessment of the economic impact? How deep could be the economic impact, and what kind of slowdown do you think we could be staring at? Will it be run into 3-4 quarters, or we could recover by the end of the year?
It all depends. One is that definitely in India we have been able to contain so far, and the overall, it is a matter of at least some satisfaction that India, as compared to many other countries, for several reasons, and the lockdown, which is considered to be one of the most strict, the containment to a large extent has happened, but the problem has not disappeared. So constantly we have to be on guard. So that is one thing. Until such time a complete cure is found, vaccination or the treatment, then it's not going to disappear. That is what it seems. Then in such a scenario, as I said, that social distancing, precautions, hygiene, all this will become very important. And as far as the economy is concerned, so it will definitely take some time for it to be returned to normalcy. And last month, or whatever estimates have come from various credit agencies, they have given their estimates of what has been the extent of loss of GDP. So whatever has been lost, I think it is lost. But everybody's desire would be that we return to normal as quickly as possible. But as I said, that would depend, one, that in the coming months also, whether we are successfully able to contain the virus and do more relaxations, and the free movement of people also, when can it be allowed? Free movement of goods now more or less allowed. Economic activity in most of the zones has been allowed excepting the containment zone. Some limited restrictions are there, but the movement of people either by train or interstate movement or by air, so that continues to remain restricted. So I think that is still some time away, and we have to wait that when all these relaxations come.
The problem which the financial system, Mr. Kumar, is facing is that there is lack of credit. There is liquidity, but nobody is lending. And given that LTRO2 saw very little success at the bankers' end, do you think there is a crisis of confidence within the banking system?
No, not at all. And it's good that you have asked this question. One is that there is ample liquidity in the system. One, because of the money that is coming from the governments, both central, majorly central, but state governments are also doing their bit for helping out the people at the bottom of the ladder, and that money is coming into the banking system. And I have not seen in several years the kind of deposit growth which has happened in 1 month, in the month of April. On the other hand, because of various reasons, the credit growth is not happening because most of the businesses are either shut down or are operating at a very low capacity utilization, 30%, 25%, 35%. So in such a scenario, even the demand for the credit is not there at all. Whatever are the sanctioned limits, people are not using it. So equating the excess liquidity or the money which banks are keeping with Reserve Bank of India, equating it with risk aversion is not right, and it is not correct. We would only know when the capacity utilization of the industry improves and fresh investment starts happening. Even the MSMEs, they are not drawing the money as of now. And there is a reach, at least for State Bank of India and many other public sector banks, I can say, because there is a constant review or a very regular review which is happening with the Department of Financial Services also. So banks have put in certain products which are to meet the need arising out of COVID-19 situation. But unless the economic activity picks up, the demand for credit is unlikely to pick up, and the lack of credit growth is not, in my view, currently because of any risk aversion. Prudence and risk aversion, both are very different words. So prudence, we have to remain prudent, but as I said, and again I am repeating, that excess liquidity parked with Reserve Bank of India cannot be equated with risk aversion in the banking system.
So let's focus on the word prudence, Mr. Kumar. What is your prudence telling you? Do you suspect and are you fearful of a fresh NPA cycle perhaps coming in whenever the moratorium period gets over, especially at the MSC and the SME cycle, not for SBI but for everybody?
So my definition of prudence is that whoever was having a good credit record and history as on 1st of March, as the State Bank of India, and I am sure that that would be the approach of many other banks. So these are the people who need all the support and should be supported because the disruption in the economic activity or their cash flows was not in their control. In such a scenario, the temporary cash disruption or even the losses which businesses or any individual because of loss of income, reduction in income, whatever is happening because of COVID-19, banks will be very mindful of this fact and will not ignore this factor while taking their credit decisions. So the cutoff date for me is 1st March, and anyone where bank was satisfied or is satisfied that there was fundamentally nothing wrong with the intent of any borrower or the borrowing entity, and whatever if there is any problem in keeping their repayments regular or unable to service the loan, that is, if on account of COVID-19, then all those people need to be supported, and at least in the State Bank of India, we are very clear in our mind that we will support all these cases. NPA we have to see, but because of the disruption in the cash flows, the one relief and the big relief which Reserve Bank has given is the 90 days moratorium. So up to 31st May, in any case, there is not an issue. And after 31st May, we have to see how the situation unfolds. But there are many businesses where the disruption is more severe. And these businesses will definitely need are likely to need some sort of defacement if they are borrowed from the banking system, or if there are MSMEs, they may need support both by way of, say, reassessment of their working capital or a fresh loan which is repayable over a period of time, and that would be the part funding of their losses.
Is a 90-day moratorium period good enough? Because the moratorium period was announced when we were in the first lockdown. After that, lockdown has got extended, and now the partial lockdown has got extended. Do you think the 90-day period which RBI announced needs to be revisited?
No, basically the lockdown, the moratorium is up to 31st May, right? So it's better that we wait till 31st May and then see that what is the demand or what is the situation, and depending upon the situation on the ground, I think these are the things which RBI can always review and take a calibrated approach. And but something which is available till 31st May. So I think the next view probably will be taken after 31st May.
Okay. There is a view with some bankers and within some market men that right now Government of India or RBI needs to set in as a guarantor for a lot of loans. Is there merit in thinking on those lines that sovereign now needs to step in and perhaps you be a backstop in this kind of an environment?
RBI, I don't know whether they would stand guarantee or not. But Government of India, I think there are many examples where in many countries the governments have stepped in and they are giving guarantees, particularly for the loans or the incremental credit given to the MSME sector. So that is one good way out of the current situation where the liability is contingent in the books of the government, and the banking system's capabilities, because banks can leverage those guarantees, and it can be a good model to help out, particularly the MSMEs.
You mentioned that you've seen a record growth in deposits, and the RBI governor also a couple of weeks ago alluded to this fact that there's a churn from small banks and cooperative banks to large banks and especially big PSU banks like SBI. Now for SBI, it is an encouraging trend, but do you think this is not an encouraging trend for the industry?
No, I've not seen the statistics for the month of April. because a few banks announced the results and they gave their figures of deposit growth for the month of March. So I don't think that I can draw that conclusion unless we have seen the numbers for all the banks for April. I have a feeling that the deposit growth may be happening for everyone because there is more money in the system. But there are many state governments where they took the decision that they or their departments may not give the money with the private sector banks. But on that front also, RBI governor has several times said that the private sector banks, they don't see an issue about the safety, and state governments should not, in that sense, completely withdraw. But I think we have to wait for some data for April and then draw a conclusion whether the private sector banks, they're getting enough deposit or not getting enough deposit.
Fair point. Do you worry about liquidity challenges for NBFCs? That's one port of lending for the Indian economy that is drying up because banks are not giving money to NBFCs. The mutual fund window also seems to be drying up. The huge crisis which happened in the mutual fund industry last week. What's your view for NBFCs? Is there some solvency issue which could come for some NBFCs?
Well, NBFCs, I think there is an issue about their collection, but so is the issue about their disbursement. So we cannot again generalize this situation. The NBFCs, or for that matter any business, they have to redraw their cash budget and take into account the inflows and outflows. And based on that, if there is any liquidity support required, the banks are willing to give that liquidity support. We have several proposals. We are considering all of them. And depending upon each NBFC's situation, the necessary liquidity support will be provided. And as far as mutual funds are concerned, RBI opened up that window. And I think only whatever number I read about 4,000 crore, that is what was used, but it helped in stabilizing the sentiment. So many times the actions taken by Reserve Bank of India or other regulators, they help in stabilizing the markets and the sentiment in the market. And that window is available on tap. And if there is any mutual fund which needs liquidity, so banks are free to give that liquidity support from their own funds because we are sitting on excess liquidity. And if any bank wants to use the window made available by RBI, they can use it on tap. It is available on tap. So I think after RBI's announcement, there is a lot of calmness as far as the mutual funds are concerned.
If I look at the stock market reaction, Mr. Kumar, banking stocks have recovered from the recent lows, but State Bank of India has not recovered. Shareholders perhaps are eager to understand that what is in store for SBI, and will SBI be doing all the heavy lifting, or will they be protecting the interest of the shareholders here?
Well, we always try to protect the interest of the shareholders, and currently I am in silent period, so let us wait for our results to be out. And as far as you call it heavy lifting, I call it a leadership role. So SBI being the largest bank in the country, in a situation like this, so it will not shirk from its responsibility. But that does not in any manner mean that we will be compromising on prudence. That is what I said in the beginning. And we will also not shy away from the responsibility which is cast on the State Bank of India, being the leader in the industry, being the largest bank, and of course there is government ownership, and that is what I understand weighs on the on the minority share holders. But fundamentally, State Bank today, it is amongst the strongest banks, and there cannot be a doubt about it.
But just to get this absolutely right, Mr. Kumar, I don't want to get this point wrong for your shareholders and for our viewers. We are going live on various platforms. Millions of people will be watching this show. You don't fear that there is going to be a new NPA cycle for SBI or for that any bank? Yes, NPAs will rise, but do you think whatever rise will happen, that's manageable, right?
Up to June quarter, I don't foresee a problem because of the moratorium given by Reserve Bank of India. So that has put in some cash in the hands of borrowing entities as well as the individual borrowers. There are certain sectors which are impacted more severely. Say, for example, aviation sector or the restaurants, entertainment, theaters, the small taxi operators, some of the commercial vehicles. So sector to sector, it will be a different impact. And it would depend that which bank has how much exposure to a particular sector. The advantage, of course, with the State Bank of India is that we hold a very diversified loan book across the sectors and across the geographies. And there will definitely be, this is my assessment of the situation, need for restructuring of some of the accounts because of the fact that there is a zero revenue in the month of April, and there will be the situation for some of the sectors may remain the same even in May, or even if there is some opening up and some revenue comes in, it will be very minimal. So in such a scenario, one is that whatever advantage people or any company can take of the RBI moratorium, that is available. As I said, this has given them some respite, some relief. But beyond that also, if there is a situation where it will take some time before the cash flows comes back to normalcy, and on account of that, there may be a need for rephasement of some of the repayment obligations, which is called restructuring. So to what extent, I think maybe we will have a better idea after a month or so. But to say that the NPAs will not rise, I don't think that would be the right statement to make. But there will be definitely a need for rephasement of repayment obligations, and what will be the exact quantum, as I have said, it would depend upon sector to sector and entity to entity.
Okay. Just two more closing questions, Mr. Kumar. What is your sense on what is happening to other subsidiaries? SBI Cards has already made an official statement that there is a decline in number of transactions and they are not in a position to share anything more than that. What about insurance, mutual fund? What's happened to those businesses?
No, there is a temporary disruption for everyone, right? So if you look at the payment data, the number of transactions for UPI, it has come down. So it means that fewer transactions are happening. Whether it is cash or the payment transactions, both have come down. You are not traveling, so you are not paying for that. You are buying, you're not buying from e-commerce site, so it has come down. So the need for payment, that itself has come down. So in such a scenario, obviously a payment company like SBI Card, so there will be a temporary impact on their business. But that is the business which will come back very quickly as soon as the people will start their normal transaction cycle. And mutual fund, of course, in the whole, in whatever the turmoil has happened, it has emerged stronger amongst all the mutual funds. So SBI subsidiaries, we are not worried at all, and they all are in a much, much better position to capture on the opportunities when the normalcy returns, and we should not be unnecessarily, I would say, worried about this temporary disruption. But SBI cards, I don't think they have declared their results, and they are a listed entity, and so are we. So that's right that they can't say anything more, and I cannot also say anything more.
And how has life changed for you personally? I mean, last time when we spoke, you said, look, you would reach home and then you never carried work back to home. Now you're working from home. So how has things changed for you?
No, I'm working from office. I've been coming to office, and but the workload, I would say, in this scenario is more than what it was pre-COVID. So every time you are on something or other, but in a situation like this, the responsibility goes up, and that cannot be avoided. If you are having the responsibility given to you, so you have to fulfill it. But I'm taking it in my stride. That's all.
Appreciated, I'm sir. My compliments, sincere compliments that, what a fantastic job State Bank of India and employees have done in order to keep the financial sector moving and going. Thank you very much. Stay safe and appreciate your time.